Maybe it's the EMA, maybe it's the MA, maybe it's the Bollinger Bands, maybe it's the AVWAP, MACD, RSI. Hey there, Tamir from Fibonacci-Traders.com here with a super special video where we are going to break some conventions. So like, subscribe and stay with me for the rest of the video. In this video I'm going to take you throughout my journey from a beginner trader until how I found the only tool that really provides us with the most accuracy where price might be heading next, and with the most accuracy how to manage our stop loss and how to manage our already open positions. As beginners, the only thing we are looking for is that one tool that will give us with the highest probability where to enter, where to exit, and most importantly, where to put our stop loss and how to handle our open positions. As a new trader, as anyone else, I went through thousands and thousands of YouTube videos. I went through dozens of WhatsApp groups, Discord, Facebook, Telegram, until I decided I want to take it one step higher, become professional trader. So I started taking courses, I started taking online courses, I started taking mentorship. It all took me around 2 years until I stopped trading, I stopped learning, and I just broke down. I sat, and for the next 2 months, I broke down all the tools that I already learned. We have so many tools, so many indicators, so many strategies based on those indicators, so many free educational information out there. So many information, most of it is free. So how come, and this is the biggest question I asked myself after 2 years of spending money on education, spending money learning how to trade, and losing money through trading. It's an investment in myself. I don't regret on any minute on my trading journey. But with all this free information, how come more than 95% of all traders lose money and stop trading, fail to overcome the first year of trading? How come? Most of us, we are normal people. We have families. We go to work. We are super normal people with super normal life. Most of us have job, teachers, pilots, lawyers, accountants, numerous of jobs. How come more than 95% of all traders fail? Doesn't make sense. So, after almost 2 years of learning and spending money on education, spending money in the market, I stopped and I just watched, and I wanted to really understand, break down each and every tool that I have in my toolbox. Which tool can give me what I'm looking for? Where to enter, where to take money, how to manage position, and where do I put my stop loss? So I went one by one. If I go over, I put here, as you can see, the most used EMAs. Doesn't matter if it's MA, EMA, SMA, DMA, they're all the same. We have the 8, 20, 50, 100, and 200, and down here we have RSI. We all know these EMAs, we all know these numbers. Most of us use them, and we also know RSI, super common indicator. So if it's super common and so many traders use it, how come most of us, more than 95% of us, quit trading after 1 here. So let's take, for example, the 8. Let's start with the 8. What I'm looking for? I'm looking for that one moving average that will show me where to enter long, where to put my stop, and where to take profit. So if I'm looking now on SQ, just for example, can I say that the 8 EMA, doesn't matter, is really holding price? If I was to take short position over here below the 8 EMA, it would throw me over here and go back down all the way, and all this I have missed. Same goes to the upside. If I went long over here, it threw me out and went all the way up. Over here, if I put my stop loss or put my entry or exit above the 8 EMA, it threw me, just circling around the 8 EMA. Look here. If I was to take long position over here, threw me here, went up. Threw me here, went up. Same goes for the downside. So 8 EMA, I can say without any doubt, doesn't help me. Let's take the 20 EMA. A little bit better, right? But same thing, what goes here? How can I trade this? I cannot. It's a sideways move. So if I went short here, it threw me here, sideways move. Also here, all the way down, I went short here, threw me here, went also short here, threw me here, went long, threw me here, went again long, threw me here. As you can see, it doesn't really hold. Price doesn't really react to the 20 EMA or vice versa, so it doesn't help me. Let's talk about the 50. 50 looks a little bit better. Or is it? If I go short here, it threw me here and then all the way down. If I go long here, after 3 green candles, I go long. Threw me here and boom to the upside. 2 times, 3 times, 4 times, and I say technical analysis doesn't work. And I can relate and I can understand that feeling. Let's take the 100 and the 200, both on the chart. Let's put them both together and let's see, do we really have difference between the two? Look here, since beginning of 2024, which one should I choose? The 100 or the 200? Look here, all the way down. Which one is better holding price? The 200, the red one? Or the 100? This one. If I choose the red one, so all this uptrend from here to here, 40%. I didn't even see it coming. 40% to the upside. And what about all this here? If I choose the 100, what about from here to here? 30%. And from here, from 54 to 60. It's another 12 or 13% that I lost because I chose the wrong EMA. So which one I should choose? And what about the RSI? Let's talk about the RSI. Above 70 is overbought. So we need to reduce our long or even sell our long positions. Below 30, it's oversold. Maybe we should start buying or closing our short position. Can we trust the RSI? Let's see. RSI on SQ went above the 70 area November 15 or November 16 over here. So according to technical analysis, according to the books, according to most of YouTube information and most of the courses out there above 70, we should start selling, right? But look here, from 55, if I listen to the RSI from 55 all the way to 80, 45%. And what about start buying once it's breaking below the 30? Look here, below the 30. Friday 15, September 2023. From here, according to RSI specialists, we should start buying, right? Slowly, slowly. Start buying, slowly, slowly. It went down under another 28%. Okay, so we can say, listen, Tamir, maybe SQ is not a great example. Perfectly fine. Let's take another one. Let's take, for example, Triple M. Let's put back the 8, 20, 50, 100, and the 200. Are you a buyer or a seller on Triple M? Look here. Below the 200, right? Broke above it. Maybe it's time to buy. But it did the same price action also over here and went sideways and back to the downside. And look at the RSI. It's above 70. So maybe it's not the time to buy. Maybe it's time to start selling. But we didn't buy because we waited for Triple M to cross above maybe the 200, maybe the 8, maybe the 100. Which one should I choose? What's the difference between the 200 and the 100? So it's up to me. How do I know which one to decide? Or the 100 and the 50? Do you see any difference? No difference whatsoever. Look here, RSI went above the 70 when Triple M was 99. It went all the way to 109. For this kind of stock, it's pretty significant uptrend. Let's talk about, let's take for example, ANF, Abercrombie and Finch. Let's put all the RSIs, all the EMA, back on the chart. We can agree that the 8 and the 20 gives us nothing, right? Because if I trust the 8, look how many times price just broke below it. 20 all the way up, threw me here, threw me out here, threw me out here, and maybe from here went up. But all the way up from here, look how many times the 20, if I rely on the 20 as my stop loss, it threw me over here, then I start chasing. Threw me once again over here, start chasing, threw me again once here, and again one here. How many times should I use a strategy that doesn't work? 3, 4. Now the 50. Look here. 50, 100, or 200. All the same. Here, it's coming to the upside. So which one should I choose? The 50, the 100, or the 200? None. And what about RSI? Here, broke above the 70 and went all the way from 47 to 56. Same goes here. Broke above the 70 when it was 77. Went all the way to 94. Ladies and gentlemen, I have a surprise for you. None of these indicators are working. None of the strategies based on these indicators don't work. Think about this. so many tools, so many strategies based on those tools, and we are still following others to tell us what to do, where to buy, what to buy, and we still lose money. The problem is not you or you or you. The problem is not me. The problem is these tools. The tools that they teach us, they don't work. They just don't. What does work? Trend lines and Fibonacci. You know how Fibonacci works? Take ANF, for example. Fibonacci, 800 years and more for this amazing, phenomenal mathematical tool. Mathematical equations, mathematical ratios, the Fibonacci sequence. It's working more than 800 years since Leonardo from Pisa, Leonardo Fibonacci, brought this amazing mathematical tool to the Western world. So if it's working for over 800 years, why shouldn't we use it? Why should we use some kind of an indicator that some random guy we don't know wrote? We can write an indicator that will seem for us the perfect indicator. Fibonacci is not an indicator. It's not. It's a system. It's a formula which price movement is based on this formula. How do I know it? Simple. Take Fibonacci from the past. Take one. Do it at home. Homework. Do this experiment by yourself. And you will see. Take one trend from the past on any time frame that you want, on any stock, any forex, any crypto, any ETF that you want, and you will see how price moves according to the future support and resistance that Fibonacci gave us. Look, for example, let's take this here. We take swing low, swing high. It gives us to the downside. I don't want to the downside. I want to the upside. But you can see also to the downside. Here you have all these extensions. Let's put the levels. We drew it from point 1 to point 0, and it gave us all future support and resistance for price action. This trend is from October 2012. Sorry, it's from November 2012 till October 2013. It gave us all the support and resistance for future price action all the way to October, September 2023. What about these ones? Just double click. Click reverse. Surprise, surprise. All the levels above 1 are the extensions, which means future levels that Fibonacci gives us. And look, now it's according to the monthly. Look at the weekly. Look at the weekly. 4 weeks. ANF holds support on this 2.272. Fibonacci gave it to us. When? 12 years earlier. Look at the daily. Resistance, support. You want another example? Take this one for example. Virgin Galactic Holdings, SPCE. This is the ticker. Goes down. Why? And why? Where are the next support and resistance? all these indicators are lagging behind price. By default, all these indicators, all of them, they are lagging. All of them. Why? Because inside their formula have price, and until price, and it doesn't matter the time frame that you are trading, until price, and this example on the daily, until the day is not closed, all these indicators cannot get their final value, which means price doesn't follow indicators. Indicators follow price. I don't need something to follow price. I can look by myself left. I can understand where price came from. Right? I can look left. On the short term, this stock came from 270 and now at the 168, 160. My problem is what to do next. Where price might be heading next. This is why I have trend lines. This is why I have Fibonacci. You can take Fibonacci, you can take trend lines. Check it out. All the lows. And this is the channel. Look at the middle line. Holding from support back to resistance, resistance, support, resistance now. But as long as these trend lines are facing to the downside, the way is down. But where? I want to go short. Take one trend way back, let's say from June 2021. Swing high, swing low. Look at this extension. Once again, swing high, swing low. Look at this extension. Cannot be more accurate. Now below the 2618, below the 150, where this price might be heading next. As long as it's following this trend line, it's going to the 0.88. Of course, we have more trends. We have this trend. We can be more accurate. But this example of how price follows Fibonacci and how price follows trend lines. All the rest of the indicators, trend lines, are the true support. Look at trend lines as your roadmap for future price action. This is your roadmap. Like this. Where the road takes us? South. South where? We need points. You take Fibonacci. Look at this. From this trend, you take it. You can take it to the top, to the high. You can take it to the low. It doesn't matter. And it gives you the perfect, almost on the cent, support, resistance to the future. So if you want to learn more about the Fibonacci, more about the trend lines, check the Fibonacci Academy playlist. We have 37 videos on the technical side and the psychology behind trading. And of course, if you want to take your trading journey to the highest level, become professional, profitable trader, check the links in the description below. Join the one-on-one live mentorship or the pre-recorded both programs, lifetime access, first, all Discord channels, and support, guidance until you will become professional trader. Thank you very much for joining and watching this video. I hope you find it educational and helpful. Like, subscribe, and don't forget to hit the notification bell. More videos coming up during this weekend.